Ever wondered how a company keeps track of all its financial transactions? Today we'll explore a tool that makes this seemingly daunting task much simpler. This tool is called a chart of accounts. A COA is a financial organizational tool that provides a comprehensive index of every account in an accounting system. Each account here is a unique record for each type of asset, liability, equity, revenue, and expense. It includes numerous subcategories for each account, making it a detailed guide for financial transactions. Now you might ask, what's the purpose of this chart of accounts? Well, the chart of accounts serves as the backbone of a company's financial record-keeping system. It offers a logical structure that simplifies the addition of new accounts and the removal of old ones. The organization of accounts within the chart of accounts can vary from one company to another. It typically comprises the accounts that a company has identified and made available for recording transactions in its general ledger. This can be done with accounting software, making the process more efficient. For ease of use, a chart of accounts also includes the names of accounts, brief descriptions, account type, account balance, and account codes for each sub-account. When it comes to creating a chart of accounts, it's important to remember that it will likely be as large and as complex as the company itself. An international corporation with several divisions may need thousands of accounts, while a small local retailer may need as few as 100. A key purpose of a chart of accounts is to segregate expenditures, revenue, assets, and liabilities. This allows viewers to quickly get a sense of a company's financial health. A well-designed chart of accounts not only meets the information needs of management, it also helps a business to comply with financial reporting standards. In summary, a chart of accounts is a financial tool that provides a comprehensive index of all the accounts in an accounting system. It serves as the backbone of a company's financial record-keeping system, providing a logical structure for the addition and removal of accounts. The COA is a reflection of a company's complexity and helps segregate financial information so that viewers can quickly assess a company's financial health. A well-designed COA is a vital tool for management and ensures compliance with financial reporting standards. So, the next time you see an intricate financial report, remember that a simple yet powerful tool called the chart of accounts is working behind the scenes, making that report possible.